threat to the United States of America from Japan. To make matters worse, we're seeing countries in the Middle East start to offload our treasuries as well. Take a look at this article from Market Watch today. This is a reason the Middle East's major oil-producing countries have been selling their U.S. treasuries. A need for liquidity may be playing a role in the decision of some countries to reduce their holdings of U.S. government debt. Now, this is a $30.6 trillion treasury market for U.S. government debt, and it's supposed to be the safe haven during uncertainty, but it hasn't been because foreign holders of these treasuries are offloading. That is happening. Custody holdings declined $15 billion on the week, but we also just have a more general flight to liquidity or demand for liquidity. So we have, this is Thomas Simmons, who is a market economist for Jefferies in New York, says, as we've seen over the last couple of years, there's been wavering confidence that demand will persist in the long run, causing the market to sell off. Now, he does know that the recent spike in yields has less to do with foreign investors selling treasuries, and it's more about a lot of uncertainty in risk markets and a demand for liquidity. Well, both of those are a problem for U.S. treasuries and for President Trump and Scott Bessent trying to bring rates down. It's both. It's foreign holders like central banks and governments, sovereign wealth funds, etc., offloading and selling U.S. treasuries. But it's also, more broadly speaking, hedge funds, not only in the U.S., but across the world, having to get liquidity. And what's, one of the best sources of liquidity right now is U.S. treasuries. There's enough demand, and there always is, good liquidity for it right now. Historically, at least, there always is good liquidity. But what we're starting to see is that the demand for treasuries based off of uncertainty in risk markets and the war is not enough to cover the selling that's taking place by somebody. So we can let economists debate all day long, is it a bigger driver of foreign holders selling it off? Is it a bigger driver, the worries about a risk-off environment because of the war? All of it combined is leading to a sell-off in the U.S. Treasury market. Now, at the same time, the Federal Reserve is trying to do their part to soak up and to answer the problem that we now face, which is the sell-off in these treasuries, specifically T-bills, which are short duration treasuries. When you look at the balance sheet of the Fed, not only has the sell-off of these treasuries stopped, it's now increasing. And it's now